Hello, I'm Kimberley Dondo, Digital Content Manager, and welcome to the In Conversation With series, a series where I speak to notable figures in the realm of financial services. Listen as they share their personal journeys, thoughts on the industry, and advice for aspiring advisors. Hello, and welcome to In Conversation With. Today, I'm joined by Helen Steers, who is a partner at Pantheon Ventures. Helen, if you could give us a bit more background into you and how you started out in financial services, that would be great.
Thanks, Kimberley, and delighted to be here with you today. Yeah, so my path into financial services, and actually particularly into venture capital and private equity, was quite serendipitous, I would say. I started out life actually as an engineer, did an engineering degree, and then worked in engineering for a couple of years, went off, did an MBA, and then about a year and a half of M&A. And then literally I was sitting there one day, reading a newspaper. I was in Canada, actually, reading the newspaper, and it said venture capitalists wanted, first degree engineering, second degree MBA, some M&A experience would be nice, or would be, favored. And I thought, well, that's me, but I've no idea what venture capital is. But I applied for the job and got it. And that was the beginning of my path in venture capital and private equity. So it wasn't planned at all. It just kind of happened. And I've now been in venture capital and private equity for 30 years. So It was clearly a good choice at the time.
Yeah. I find that especially within financial services, it does seem to be that like fate or serendipity, whatever you want to call it, that's what leads you down the path. It's not as straightforward as I wanted to be a lawyer, so I just followed down that path. I don't know if it's whether because unless you have someone in your circle who knows about, who has someone who works in some area of financial services, then you aren't aware of it. But yeah, I like your story. It's very interesting.
And if you think about it, so my parents actually both originally trained as teachers. Right. And my mother's actually a classical musician. Wow. So I had no kind of venture capital or private equity in my background.
That must have been interesting going back and trying to explain to them what you now do.
Well, actually, funnily enough, my mother still cuts out articles from the newspaper on, when she reads something about private equity, and it's very sweet. She cuts it out and she sends it to me.
Oh, that's very sweet. I love that. But now getting into what you do and private equity. So for our audience, how do private equity investments fit into an investor's overall investment portfolio?
Yeah, well, it's a great question. And I suppose the clue there is in equity. So it is part of the overall sort of equity spectrum versus fixed income. But so these are investments in companies, but they just happen to be private companies rather than public companies. And, why would an investor be interested in private companies? Well, over time, the number of opportunities to invest in private companies has expanded enormously, whereas the number of public companies has actually shrunk. So although the overall public markets clearly have increased in terms of value, in terms of number of companies, it's actually shrunk because fewer companies have been going public because actually they can remain private and grow very successfully as private companies without having to go public. So we talk about expanding private markets and shrinking public markets. And that's a very good reason why an investor should be thinking about private markets, because actually they can't get access to the full range of equity investments just within public markets anymore, and actually some of the most exciting, fast growing companies are actually in private markets rather than public markets.
Yeah. I have no experience in like venture capital and all that stuff, but I do remember going to one event once when I was watching, people pitch themselves. And I think for me, what I found really interesting was that you can get your foot in the door for something that could be revolutionary, but like super early on, something that, you know, the public doesn't know about yet. I think that that part of it interests me the most.
Yeah, I mean, there's some really interesting sort of cutting edge technology companies that you can invest in from sort of venture capital perspective. But actually private equity covers all stages of a company's growth, right from the very early days where literally you got, you know, two people in a garage inventing a product, you know, that can then be marketed and distributed worldwide, you know, all the way through to, you know, quite large companies which are privately owned, you know, and there's all sorts of examples people will have heard of. I mean, for example, I'm a big user of Olaplex because I've got very curly hair and I need Olaplex to tame it. And, you know, that's a product that was invented in a garage, on the west coast of America by a, you know, husband and wife, I think. And then, you know, became very successful and, you know, then private equity invested in it and it's now a public company actually in the US.
Wow. I think those stories and seeing how they impact other people, I think those are very important stories. And I think it makes you feel like you're doing something bigger than just, you know, putting your money somewhere, you know, I think that's quite good. But moving on to the next question, how do private equity managers pick the companies they invest in? So what is your approach when you're, you know, choosing these companies?
Yeah. Well, we invest, in funds that are raised by private equity managers. So they have their strategists for then going out and finding the companies. And then we also invest alongside those managers directly into the companies. So, you know, we sort of invest in both ways through a fund, but we also invest directly as well. So the way that we select the companies and the way that our managers select the companies is, you know, there is a general investment strategy. You know, we're looking at certain sectors, industry sectors that we particularly like, or even sort of particular subsectors of those industries. And then we're looking for like multi-year growth trends, you know, so this is private equity is much longer term than in many ways than public markets. We're not looking at the next quarter's earnings or even the next year's earnings. You know, we're looking to see how big this company could be in 5 years, say. So it's very much long term. And then, you know, once we're in sort of looking at the long-term theme and, you know, making sure that the products are right and they're in the right, you know, market, you then look at the company management, you know, how well qualified is the company management and how incentivized are they? One of the great things about private equity is that, you know, there is an alignment of interest between the investors who are putting money into the company and the company management who also put up money, you know, alongside the investors, so that if the company does well, everybody does well, the company management does well, but also the investors do well too. So, you know, they're looking in general, they and we are looking for companies that are really well positioned in their markets, usually growth companies, you know, growing pretty fast, that have got, you know, a type of product or service that's still going to be needed in, you know, the next 5 years. So looking for long-term growth trends. So to give you examples of that, you know, we like the whole digitalization trend. So the way that you know, everything is being digitalized in every sector, and that will then get translated to things like, you know, enterprise software, helping small and mid-market enterprises being, you know, becoming more efficient, you know, accounting packages, legal software packages, you know, all of that. Yeah. We like aging demographics. Well, personally, I don't like aging demographics, but it's a good long-term investment theme. And there we're investing in sort of healthcare services. So, for example, in the US, we're invested in a chain of eye care clinics that helps do cataract surgery. So for people that get older, they get cataracts, they have to be removed. So that's like a long-term trend. And then the other area we like is sustainability and energy efficiency. Yeah. Because, you know, that is a multi-year theme. It's not going to go away anytime soon. Yeah. And there's a number of companies we've invested in that part of the market as well.
Yeah. So I like that you like look at different aspects of what will affect the population, you know, going on and that long-term plan. I think, well, obviously, you know, that it's a really good plan. But what is the due diligence process for evaluating private equity investments? What do you do personally?
So it's pretty lengthy. It can take a long time. You can sometimes be looking at these private companies for years, not just for weeks and for months, to see how they develop, over time before you make the investment. But we're looking for both sort of quantitative and qualitative factors. We're looking at performance of the companies. The numbers are really important. But then importantly, we're looking at their strategies for growth in the future. How are they going to expand their product lines? Are there adjacent markets they're going to go into? Are they thinking of acquiring other businesses that they can then fold into their business as and that's very synergistic, of course. And then we're evaluating the management team. How capable is the management team? What are they doing to help grow the business? Are there any gaps in the management team? Do we need to add, say, a chief digitalization officer? These days that is often a gap in a company. And then really importantly, ESG. So the ESG credentials of the company. We won't touch companies at all in certain areas. And even in areas you might think are okay, maybe there is a big customer of the company that we don't sort of think is the right customer to be dealing with, or, maybe there's a supplier issue there. So we spend a lot of time looking at the ESG issues, because it's a risk, clearly, but there's also sort of, value creation as well if you're investing in the right types of businesses, and there could be, energy efficiency savings to be made, that sort of thing.
And in those cases where something might go wrong, or it's just time to part ways, what are the exit strategies for private equity investments?
It's a great question, because clearly if it's a public company, you can exit your shares on the market. If it's a private company, it's slightly different. So usually, you invest in a private company for about 5 years or so. At the end of that period, there's really three main exit routes. Selling to a trade or corporate buyer. So, a big trade buyer might come in and, buy your business. You could sell to a bigger private equity fund, and that's sort of the next biggest exit route. Or potentially you could IPO the business, but that's the smallest exit route, in fact. So, that's how we evaluate the exit strategies.
Yeah, I think that all makes sense. And to make sure that you have a clear-cut plan. And so finally, what are the typical fees associated with investing in private equity, and how do they impact returns for investors?
Yeah, so private equity managers generally charge a management fee on the capital that's invested. And, at the fund level, that's usually around sort of between 1.5% and 2% on the capital. And then importantly, when they exit the businesses, and actually when they exit a whole portfolio of businesses, they make a performance fee. But it's charged on the entire portfolio. So the good investments get balanced out by the not so good investments. So it's on a sort of net basis, and it's after, the fund is sort of wound up. So there isn't a high watermark like you get in certain sort of alternative asset classes. And that performance fee is 20% of the profits. So it's a performance fee of 20%. So it's more expensive than in public equities, but the sort of returns that you get tend to be better than in public equities. So we, like other big investors, are looking for at least 300 to 500 basis points over the sort of the net returns you would get from public markets over the long term. So a net 300 to 500 basis points over, public market returns is what we aim to get. And actually it's what we've delivered over a long period of time. I manage, Pantheon International PLC, or PIN is the ticker. And that's, it's an investment trust which invests in private companies. And, we've been around for about 35 years. And over that time, we've delivered just over 12.2% net of all fees, per annum over that 35-year period.
Wow. I mean, that seems it seems like a good investment. I think overall, in terms of, the returns are great, but also I think what draws me to it, maybe I'm just, I don't know, a snowflake. I don't know how people would describe me, but I like the idea that what I'm putting my money into can impact this world positively as well. And
absolutely. Yeah.
And you're not just in terms of like with public companies, you just know the company by name, but you don't really know what they're like. You guys get into seeing, the management team and how they work and all that. And seeing, what their character is as well, and whether they can deliver on what they want to achieve. And I think that is quite important to me. Again, maybe I'm just too much of a sensitive.
Not at all. I think it's really important. It's why I've stayed in this business for 30 years. I think it's absolutely fascinating. I can truly say with my hand on my heart that I've never had a dull or boring day or week in with what I do, because I'm constantly meeting really interesting people, interesting companies. And as you say, I think we're creating value for the long term, which is important.
Yeah. Amazing. Well, I really enjoyed talking to you, Helen, and I definitely will be looking at possibly doing some private equity investments in the future. So thank you.
That's great. Thank you, Kimberley. It's a delight to speak to you. Thank you so much for your questions as well.
Thank you for listening to In Conversation With. We do hope that you enjoyed it. Please do keep up to date with all our new releases via Podbean, Apple Podcasts, Spotify, and everywhere else you get your podcasts from. You can also keep up to date with all our new content published on the Money Marketing website, as well as our print edition Money Marketing magazine. So make sure to subscribe. Follow us on Twitter, LinkedIn, Facebook, and Instagram. See you next time.